What we discovered is Bitcoin is digital capital. Bitcoin is going up faster than the S&P forever, right? Once you actually acknowledge that Bitcoin is appreciating more than the S&P forever, and my forecast is it appreciates about 29% a year for the next 21 years. And if Bitcoin is an asset and it's appreciating, then you can create credit collateralized by that appreciating asset. So Bitcoin's digital capital appreciating faster than the cost of capital. The cost of capital is the S&P 500 return. This is the digital gold rush in the 10 years from 2025 to 2035. There's going to be a lot of different business models, a lot of different products created, and a lot of different companies launched and a lot of money made, and there'll be a lot of mistakes made and a lot of fortunes created.
For the past 21 years, Bitcoin has been projected to appreciate by nearly 30% annually, a growth rate unmatched anywhere in global markets. Just as oil fueled the great empires of the last century, Bitcoin is emerging as the capital foundation of this one. Entire companies will be built upon it, industries will transform, and billions in new wealth will be created, all driven by a single asset that continues to outperform every other. That's the message from MicroStrategy's executive chairman, Michael Saylor, who believes the line between depreciating assets and appreciating capital is becoming clearer with each passing year. Unlike currencies that can be endlessly printed or real estate burdened with ongoing costs, Bitcoin's value compounds through scarcity and growing demand. Each coin represents a fraction of a network that can't be duplicated or inflated, making it one of the most reliable stores of value in an era defined by monetary uncertainty. As capital continues to flow toward Bitcoin, the traditional pillars of finance, fiat currency, bonds, and real estate are starting to show their age. For Saylor, this isn't just another market cycle. It's the foundation of a new financial era where digital scarcity becomes the ultimate driver of wealth creation. Stay tuned until the end of the video, where Michael Saylor breaks down why Bitcoin's projected 30% annual growth could fuel the next great digital gold rush from 2025 to 2035. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
I think there's a natural ebb and flow in the economy and in the community. And so Bitcoin surges up and has periods of extraordinary excitement, generates a lot of adrenaline and enthusiasm. Then there's a celebration, and then people extrapolate straight line to the moon. And then it retraces a bit and consolidates. And then people think, well, it's going to bounce back really fast. And if it chops sideways for a while, there's always a natural human tendency to get frustrated. I don't think we have anything to be unhappy about. The truth is, if you zoom out and look at the 1-year chart, Bitcoin is like up 99%. It's like nearly double. So if you walked in up to anybody in the street and said, hey, I'm heavily invested in an asset that is growing up 100% a year, should I be happy or not? They would say, you should be happy, right? It's just that the way that it gets there tends to be a bit volatile. As for why, I think the why Bitcoin has been consolidating, building its support in the teens right now, is because you've got $2.3 trillion of Bitcoin that is unbanked. And so you've got a lot of people that own a lot of Bitcoin, but they can't get a loan against it. And because they can't get a loan against it, the only, at the point that you all of a sudden find yourself Bitcoin rich, but fiat poor, you don't have a lot of dollars, but you have a lot of Bitcoin and you can't borrow against it, then you think, I have to go sell it. So I think Bitcoin's right now, it's like this Mag 7 startup where all of a sudden all the employees got insanely rich on penny stock options, but they can't borrow against them, so they have to sell them. And so they're selling, and then people are saying, well, why are those employees selling this stock? Is that a vote of not confidence, in the company? And the answer is no. It's just they have kids to go to college. They want to buy a house, right? They want to live comfortably. They want to do something for their parents. And so right now, I think that the selling is crypto OGs that have had a lot of money for a long time. They're selling 5%, diversifying. They're doing something like that. And the market is absorbing all of that energy, building its support. The volatility is coming out of the asset. That's a really good sign. But because what you want for the asset to mature is for lots of long-term capital holders, the big corporations, the big institutions to buy. You want the early OGs that bought Bitcoin for $1 or $5 or $10 to sell some or as much as they need to so they feel comfortable. You want the volatility to decrease so the mega institutions feel comfortable entering the space and size. And the conundrum is, well, if the mega institutions are going to enter, if the volatility decreases, it's going to be boring for a while. And because it's boring for a while, people's adrenaline rush is going to drop. And it's like they had this big high and now the adrenaline is wearing off and they're a little bit bearish. But this is just a growing stage or, natural for the life cycle of an asset that's monetizing like this. There are a lot of assets, the greatest property assets of Western civilization, assets like diamonds, assets like gold, assets like old masters' paintings, assets like land, the Louisiana Territory, California, Mexico, all of Alaska. None of them have cash flows. Right? All of the great things we've acquired in life. Truthfully, if we think about what we want in life, whether it's a spouse, a marriage, kids, they have no cash flows. A house, no cash flows. Right? So the world's full of things, right? A Nobel Prize, no cash flows. Fame, no cash flows. Yeah. Yachts and jets don't have cash flows either. So the world's full of things that are deemed valuable in the world. They have no cash flows. And of course, as we know, the perfect money has no cash flows. The whole definition of money, a liquid, the most saleable asset. But if you want something to be money, you want it to have no utility value. Gold is better than silver because it has less utility value. And when copper or when you find something like silicon that has utility value of some sort, it becomes worse money. And so I think probably people say, well, we don't really think this is good investment asset because it has no cash flows. That's an opinion that has developed in 2 generations. Certainly since 1971, in the period, from 1971 on till today, I think the world developed a view, and its view was, long-term capital is a 60-40 mix of bonds and equities. And bonds had some dividend yield to them, and then bonds had some coupon, and equities had some dividend yield or some earnings. And that's just the way they saw the world. And eventually, the S&P 500 became the monster. If you look at index investors, 85% of indexes are invested in the S&P. So many people think long-term capital, what they think of as money held for the long term, is an equity index like the S&P index. Vanguard, they commercialized this and they made famous the idea of the Vanguard 500 and the Vanguard Index Fund. So when organizations are hyper successful with an idea like 500 stocks in a fund, and when the entire institution, right, the S&P or Vanguard or mutual funds, when they're built on that idea, when a disruptive new idea comes along that's even better, it's not natural that they would embrace the disruptive new idea. They're kind of stuck in their ways. As a practical matter, in a world of that's U.S. dollar, the U.S. economy is growing and the dollar is the king of the world. It's the world reserve currency. And there's no, there was no world war after World War II, right? Mm-hmm. So we haven't had a massive disruptive world war. Then you're living in a very particular situation, a particular time, and and you could fall into. In calculus, we call it a particular solution to a differential equation. If all of the boundary conditions are set, and if this, 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 then you can just plug in this number and you'll get out that answer.
Saylor's message is clear. Volatility isn't weakness, it's part of Bitcoin's strength. Every cycle of selling and consolidation, he says, only reinforces the foundation for the next phase of growth. The fact that Bitcoin has doubled in value within a year is proof of its resilience. As institutions continue to enter the market, liquidity deepens, maturity increases, and Bitcoin becomes even harder to dislodge. What early adopters view as exit points, new participants see as opportunities to enter a system that can't be inflated, manipulated, or controlled. This is why Saylor dismisses the obsession with short-term returns. The most valuable assets in human history, gold, land, and even cultural landmarks, have held their worth not because they produce dividends, but because they embody permanence. Bitcoin captures that same principle in digital form. It represents enduring value in a world where almost everything else can be printed, duplicated, or devalued. In countries where fiat currencies are collapsing, Bitcoin offers stability. In economies suffering from inflation, it acts as a store of savings. Saylor believes Bitcoin is no longer just an investment, it's rapidly becoming the foundation of a new global monetary order.
Anything with cash flows, they're all worthless. So the irony, of course, is one of these good traditional safe assets that generates cash flows. Well, not in Nigerian currency, not in the Bolivar, not in the peso, not in the Lebanese currency, not in the Iraqi or the Afghani currency. I can give you not in a Russian currency, before the collapse of the ruble that took place at the turn of the century, 96 or something. So the people that have these ideas, they have a particular set of solutions that work in a very stable, closed ecosystem that's never been challenged either with external stress or never encountered a new idea. When the people that will get Bitcoin will either come out of very chaotic environments, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and rederive it. So I think, the great irony is, again, the CEO of Vanguard saying Bitcoin is not an investable asset because it doesn't have cash flows, and then the largest shareholder of my company being Vanguard.
Ironic.
The most ironic outcome is most likely, according to Mr. Musk.
Let's zoom in on bonds as an asset class and maybe give a little master class for the mainstream audience about how you're revolutionizing the credit markets. I want to first start with just what problem did you identify in the fixed income world that you thought could be solved with Bitcoin?
Yeah, credit. If you look at the credit markets, you got mortgage-backed credit. Mortgage-backed securities are 1.5 times collateralized, and they yield like 2, 3, 4%. And then you have fiat credit. It's credit backed by the promise that the government will print more money. Mm-hmm. And that sets the risk-free rate. That credit, in Japan generates 50 basis points. And Switzerland generates minus 50 basis points. In Europe, 200 basis points a year. And in the US, about 400. It just got reduced by 25 basis points yesterday, right? So you have that kind of credit. Then you have corporate credit. And corporate credit, is backed by the cash flows of companies, whether they're good companies like the Magnificent Seven, like Microsoft or Apple, or they're junk bonds, or they're struggling companies that, are struggling to stay in business. Those credit spreads can range from 50 basis points all the way up to 500. But that means that when you're buying corporate bonds in Europe, you might be getting 250 basis points a year in yield.
Saylor's long-term vision goes far beyond simply holding Bitcoin as an asset. He believes it has the potential to redefine credit itself. In his view, traditional financial instruments like mortgages, corporate bonds, and government debt trap investors in low-yield assets burdened with high risk. Bitcoin, by contrast, has consistently outperformed the S&P 500 and could serve as far stronger collateral for future lending systems. From that base, Saylor envisions entirely new types of credit markets, some resembling traditional bonds with stability and priority, others functioning more like equity, offering higher risk but greater potential returns. He even imagines money market-style products built on Bitcoin that could provide monthly yields, something conventional markets have never truly achieved. But for Saylor, this vision isn't just about financial innovation, it's about rebuilding the foundation of global finance itself. By placing Bitcoin at the core of both credit and equity systems, he believes we can create a more resilient, transparent, and inclusive economy. Beyond economics, Saylor sees Bitcoin as a force for social change, one that can cut through manipulation, corruption, and inequality. To him, the coming decade represents more than just a digital gold rush. It's an opportunity to restore trust and build a fairer, more open financial world. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.